The ADX indicator is a game changer when used correctly. I'll show you exactly how to read it, when to enter, and how to combine it with other indicators for insane accuracy. By the end of this video, you'll never look at trends the same way again. ADX looks like this on your chart. It's essentially a modified graph passed through a formula. In the indicator, there are 3 lines. Let's start with the main red line. It shows the strength of the trend, but not the direction. Whether the price is sharply falling or rising, this red line will reflect it. The other 2 lines, blue and yellow, show who's dominating the market right now, bulls or bears. For example, if the yellow line is above the blue one, it means bears are dominating and there's a downtrend. If blue line is above yellow, it's a strong uptrend. ADX itself doesn't predict if the market will rise or fall, it only shows how confidently the price is moving. Now let's get to the main topic, how to use ADX correctly. If it shows a value above 25, the market is really moving, and we can look for trend entries. For example, if ADX is rising and the blue line is above the yellow, it indicates a strengthening uptrend. In such situations, we can look for additional entry confirmations for continued upward movement. If the ADX is above 40, it means the trend is very strong. But when it gets too high, the market might be overheated, and a pullback could happen soon. If it's at its highest levels and the price is near strong resistance, it's better to be careful before opening a trade. There's a chance the trend could slow down or even reverse. I want to start trading, but I'm scared I'll lose money because I'm a total beginner and don't know what I'm doing. I hear this every day. So just reminding you, you can copy my trades for free right now. Just hop on a demo, test it, and see for yourself if it works or not. I trade on Pocket Option, and since I have a partnership with them, you can copy my trades for free as long as you're on Pocket. Instead of paying $150, I'll get a commission from the platform. And no, this won't make you rich overnight, but it gets you started. You'll see how it works, make your first profit, and then decide if you want to go deeper. I see new success stories in my DMs every day, so don't tell me it can't be done. Today it's easier than ever, and you've got the perfect chance to take that first step. When does the indicator give false signals? Like any other indicator, this one isn't perfect and can lag or give false signals in certain situations. Let's break down when not to rely on it. Before using the indicator, pay attention to volatility. If the market is making sharp up and down moves, the indicator may lag because it's based on past data. Another common situation is false crossovers between the yellow and red lines. Many traders think that when they cross, it signals a trend reversal. This is one of the most common mistakes. In reality, crossovers can occur in a sideways market, leading to many false signals. Always look at the overall context. Let's take a look at a few examples of using the indicator in real trading. On the chart, we see a downtrend. The price confidently moved down but hit a strong support level and bounced off it. Look here, a double bottom reversal pattern formed. This pattern suggests a potential change in direction, but one pattern alone isn't enough for a trade entry. The price already broke the first resistance level, but did so with low volatility, so I wait for confirmation, a break of the next significant level. To confirm the trend reversal, let's look at the ADX indicator. The red line is above the 25 level, indicating a strong trend. But since we encountered a reversal pattern, we need to ensure the new trend is strong. Notice the turquoise line is rising and crosses above the red line. This means bulls are taking control, confirming the trend change. I wait for a break above the level with high volatility and enter a 5-minute trade in the direction of the trend. Note, a triple top reversal pattern recently formed and played out successfully on the chart. Before breaking the support level, the price consolidated, clearly shown by the indicator. The yellow line starts to rise, reaches its peak after consolidation, and loses strength. This is another confirmation of a trend change. Great, the trade closes in profit. Now let's move on to the second trade. Here we have a downtrend. The price broke the trend line up but immediately hit a resistance level where a double top pattern formed. In such a situation, I use the back to trend strategy. Its essence is that when the price temporarily breaks the trend line, consolidates, or forms a reversal pattern, it often returns to the main trend. Let's look at the indicator. The trend strength line is below 25, indicating the trend is weak and the market hasn't decided yet. But an important point, the turquoise line was initially above the red, but now they cross, confirming the trend reversal. This is a strong signal indicating that the downtrend is resuming. The price breaks the support level. However, since volatility decreased at the breakout moment, I extend the expiration time to 8 minutes. Because in a weak trend, the price can fluctuate before moving in the desired direction. Note that just before this, volatility was moderate, but at the trend line break, it sharply dropped, indicating a false breakout. This is another point in favor of our trade. And finally, the third trade. Here we have an uptrend that has already made an impulsive move up and then consolidated. Drawing two trend lines, I see a flag pattern for trend continuation. This means our entry point will be on the breakout above the trend line. Let's look at ADX. The trend strength line is above 25 and the upward line is above the downward line, indicating a strong uptrend. Note one more crucial point. The turquoise line has reached its peak, and during consolidation, it started to decline. But since the trend is strong, its decline doesn't indicate a reversal, only a temporary pause before the breakout. Now let's look at volatility. Inside the pattern, the price moved in a narrow corridor. But before the breakout, volatility decreased, then sharply increased, breaking the trend line upwards. This is what we need. I open a 6-minute trade because there are no higher resistance levels that could hinder the price from moving further. As you can see, the ADX indicator is excellent for confirming trends and breakouts. The main thing to remember, it doesn't work on its own. It should always be part of your technical analysis. Remember, indicators don't provide a 100% guarantee, but serve as a tool for more accurate entries. If you found this helpful, be sure to like and subscribe. There's more strategy breakdowns and cool tips for profitable trading ahead. Stay safe and be in touch.